Good morning. It's early. It's late. Late. It's close to 9. Let's see. This is crazy that I need to turn on the do not disturb. Do not disturb. Let's see. Home. No, that's not. That is not the one. Let's see. Home. Live. It says I'm live. I swear it says that I'm live. Let's quit the YouTube app. Morning, Joe. Let's see. Live. And I'm not even listed on live. So it's crazy. I don't know what goes on here. You. And let's see. View channel. There we go. Oh. I've got to go over to YouTube and turn on monetization. Everyone that's in here now doesn't get monetized, but let's go. I don't know. I have to start doing this crap. Content live, and we'll turn this on. Save, and it's saved on. And I'm going to start doing scans. Hopefully it doesn't freeze. I did a new, hey, Larry. Okay, here's as much energy as I have. Larry. Good morning, Chris. Good morning, John. I'm feeling slightly better, but the cold has gotten worse. So, but today's is going to be short because I don't have that much, and I am under the weather. So I think I said that I was going to do a 10-minute show yesterday, but I wound up doing like a 20-minute show. Scans, nothing in the core. Brokerage. Let me see if there's something in there. Nope. Let's look at covered call, ETFs. I'm going to get rid of SPY. I did a calculation. I'm not happy with SPY. Over this bull run, I would have been better off having just the Qs or something like that. So, SARK, low cost Vanguard, nothing. Oh, spider sectors. Not owned. Rivian right before. Rivian right before earnings. Their earnings are, or no, oh, they had their earnings. So I'm gonna take. I didn't think they had earnings. They had their earnings. I thought they were coming up for some reason. It's kind of capitulating down there. Not owned. And then we're going to go to the Dow. 3M. Nike. Nike's at 107. We're going to go to the NASDAQ 100. Baker Hughes. It's not exciting. S&P. Bristol Myers, man. Nah, we'll leave that one out. Anything in the core portfolio that's shocking? Shopify's down. I'll bring up Shopify when we go to. Did it hit a? No, let me see. Let's look at shop. See, it's near 52-week highs. Okay, I can bring that up as an example. Today's more of a, hey, we've got a lot of stocks that hit a 52-week high. In fact, let's go to the whales. I think it's the unusual whales. Okay, I'm gonna go here, and then I gotta look at my likes because there's a 52-week high post that I liked last night. There it is. No, that's the cost of the batteries. James Cameron. My new digs. Where the hell is the 52-week? I think it's Unusual Whales that posts it. Yeah, man, look at how much they post. Nope. Cyber Monday deal. Where the hell is it? Who posted it? 44 symbols. Shop got downgraded. Yeah, I mean, I think it's a valuation thing. I forgot to put this. I'm looking for, there was a post that I look at every day that has new 52-week highs, but let's see. It should be in my likes, but I can't imagine I didn't like it. I was wearing a bulletproof vest. That's usually what it looks like, but I can't find it. They used ChatGPT to do interior design, which was interesting. Let's call opportunity for Cyber Monday. I don't know what the deal is with TrendSpider now. Let's see what the deal is. Product, plans and pricing. They extended it for 2 days. They're really trying to bolster up their year-end subscriber count, so I'm helping them. Okay, so we got our scans. I'm going to go to Strategy Tester, and I'm going to pull up the 4-hour and take a look. Hey, do you like the graphics down below? I think it's less intrusive. Doesn't allow the screen, and I'm still trying to figure out it out, but at some point I'll figure it out. Okay. Boeing's up again, Joe. I know Joe is not a fan of, you don't shit where you eat kind of thing. And it's the same for investments. But once we broke that 200 day at 209, you're kind of getting the button hook here. And you've got some gaps to fill down below. It'll go under 200 again. At some point in time. It'll get there. It'll get there. Apple's button hooking. Let's go to the Qs. Qs solidly still above confirmation. Morning, Mark. By the way, if I didn't say good morning, Chris, good morning, John. Okay, let's see. I'm going to start this puppy because I don't think I'm going to last very long. C-scaler. Okay. Yeah, exactly. And I think there's 50 or so over in China. Morning, Scott. Yeah, I'm gonna go downstairs and make some French toast and some fresh squeezed orange juice. I gotta go to the store because I've been eating Thanksgiving leftovers the whole time. Didn't help that the dogs woke me up at 3 a.m. too. I was in a NyQuil coma, and yeah. Hold on 1 second. I had to blow my nose. And I have to put on my watch. Okay. Boom, boom, boom. Okay. Okay. Larry, so you know I didn't get out yesterday. I didn't feel well enough to go out. So I started watching that winning thing, the series about Magic Johnson and the Lakers. I'm watching season 2 on Max. I like it. Spirit Aero Systems, Joe. I don't know if that's a hey, let's get back into this or not, but let's go over here to Savvy Trader. I'm gonna close that one down. And we're gonna go to earnings. Okay. Okay. Let me just hit record. Good morning. It's another low energy Gary day. It's Tuesday, November 28th. Markets yesterday, we had a red candle in the afternoon, green candle. There's just volume's just down. I mean, look at the volume. This is the Qs. So it's the week, after Thanksgiving. This is what you're going to start to see probably for the rest of this week. Is just, hey, we're just going to, kind of flutter along. No big news, no huge, rally of like 5-10% on anything that happens. It's just going to be what it is. So what you want to do is kind of just assess your portfolio. Don't be forced into trades. You don't have to trade something. If you find an opportunity, take it. But don't feel like you have to go in because we've had such a run in November. Doesn't mean that we're not going to have a continued run. Doesn't mean that you have to get out of everything. Just means watch it. You should already have been in. Some of the opportunities I see, Bank of America still under 30. Cleveland Cliffs back under 17. I think that one's fine. Disney still under 100. Devon Energy's a little bit tough. I don't know that I'd necessarily take that one, but it's under 50. If you want to go long haul, I do think that one gets under 50. Eli Lilly under 600. This one, it's been beaten down. It's expensive. You kind of can go down the list. There's other opportunities. SMCI, that one is still under 300. It's at 291. I think that covers the gap to 350. Tesla, you got the Cybertruck coming out on Thursday, I think it is. You got that event. So I think there's some hype. There's just not a ton. You got Taiwan Semi that's still under 100. And you've got, Exxon at 104, probably running to 110. So there's some opportunities in the market. It's just you don't have to force it. You really don't have to force it. One that we have coming up this afternoon that has run, and you can see if we go over to Savvy Trader, you can just go down here. If you go to the earnings button on Savvy Trader, down here at the bottom, you can just look up CrowdStrike. Look at this. Earnings per share, 40 cents last year during this time. Expected to be 74 cents. That's double. Revenue, previous year, 580. The expected is 777. That's a huge, huge increase. Well, what have we done in the last year? If we just go to a weekly and we kind of look at this time last year, you were trading at 108. So you're double, 110. You're trading at $210 today. So nearly double from last year. Solid company. I've been adding on this one all the way up. What you have to know is it's expensive. You look at CrowdStrike. They're not making money. If they announce that they're making a profit, holy crap, this one will take off. The forward PE is 59. That's incredibly high. Year to date, you're up 99%. Average target price 208. You're trading at 210. The most recent upgrade just was a week ago, and they have a $225 price target. It's at 210. What do you want to do? You want to trim. You absolutely want to trim. You can see right here, there's a 52-week high. You're 1% below it. 52-week low, you're 127% above it. So what you really want to do, and you've got to find some website for your portfolio. I have this in Fidelity. If you don't have it in your brokerage, I would suggest you sign up for Seeking Alpha and get it. But this 52-week range buttons right here, you can see Apple close to the high. I use this all the time to look at my portfolio. I have it in Fidelity. You can see Pepsi down near the bottom. You can see Oxy down near the bottom. You can see Exxon down near the bottom. That's how you find opportunities to add to your positions and opportunities to trim. There's a couple of rules, and this is what this podcast is going to be more about, is a couple of rules when you reach a 52-week high. But before we get to that, I do want to mention another earnings from last night that I think is an opportunity, Zscaler. This one is down 5% at 181. So you closed at 191, you're at 181, which is right about here covering this gap. In pre-market, we covered this gap. It is expensive, but their earnings and Shea Ballure right here, Earnings per share 67 cents versus an estimate of 49 cents. Sales 497 million versus an estimate of 473. This graph right here shows it all. Q3 2021 all the way to Q3 2023. Look at that revenue and earnings per share growth, both growing. That's a solid company. The stock just above its 200-day. Not crazy expensive because back here we were trading at 335. If you go over and you look, remember the forward PE on CrowdStrike was 59. The forward PE on this one is 65, but the earnings should bring that down because, again, they blew away earnings. So this should adjust probably today. I don't know if it adjusts real time or not. Needham today, strong buy, 225. You're trading at 181. $225 is a significant range upward. So there are opportunities in the market. I'm not saying go out and buy Zscaler. Personally, I own PanW. I own CrowdStrike. I don't own Zscaler. PanW, the forward PE is 41, but the PE is 152. This one, PanW, they've already had their earnings. They blew them away. And they're done, but they're still on the upside. So I'm not getting rid of it, even though it's at a 52-week high. We'll talk about that one. But Zscaler, solid earnings. Since there's a ton of them at 52-week highs, and I'm going to read my notes here, and you'll see how bad I am at reading. I wanted to remember what to do. How I use the 52-week sliders, like I said, these are the sliders that I see. And I will include, by the way, there were a ton of stocks, probably about 30, that reached 52-week highs at some point yesterday. So what do you do if you look over these sliders and you see, hey, we're at a 52-week high? It's a couple of rules. If a stock is close to a 52-week high, if you see it close, just on the upside of the 50%, you want to start taking a look at it. You want to take note of it. Remember, I talk about journaling things. You want to take notes of it. In a tax advantage plan, like an IRA at 52-week highs, you want to sell at least one share. Mindset. Take a profit. You want to sell at least one share. Even if you only have 2 shares, sell 1 share. It's all about psychology in those tax advantage plans because you're not creating a tax event at 52-week highs. Once it loses confirmation, you can use, this is why I say Seeking Alpha and TrendSpider both are the perfect combination because you get this 52-week slider on your portfolio. And then you can go over here and you can say, a good one yesterday, Shopify hit 52-week highs. They have all the catalysts in the world to continue going up. But what you want to do is you take a look at Shopify. We can go down here. Where is Shopify? Shopify's right here. 74.47. In pre-market, it's at 72.81. It hasn't lost confirmation. You can see right along that 9-day. It's perfectly fine. You can see the pop in volume up there. You can see the RSI's at 80. You can see the MACD is up at 2 point something. I mean, it's just super overexposed to a downward fall and cover some of these gaps. Take profits. Sell 1 share. Even though it hasn't lost confirmation, just sell 1 share. As it loses confirmation, you want to start trimming more because in a tax advantage plan, you can add it back whenever you want. You can add it back whenever you want, and typically this is going to slow down. Now, the problem with Shopify is you don't want to get rid of it all because you haven't hit the 200-day. The 200-day, I've said this, it's going to hit 80. The 200 days at 81. You're at 52-week highs. Sell 1 share. It's more about mindset than it is anything else. You want to be able to not fall in love with that stock and get rid of it when you can. Now, if you're in the a brokerage account where there is a tax event, you'll have to basically reevaluate. Me, I have Shopify both in a retirement plan and in a brokerage account, and I started to get rid of it yesterday. I started to get rid of it at 73. I sold 1 share. Now I have a significant amount more than 1 share, but that was in a brokerage account where it's a short-term holding. So I took some short-term profits on that one. I am holding it for the long term. I can see the 50 days moving that. That is probably the only share that I will sell in my brokerage account. I will continue to add to it because I do think that it's a solid company. They have shown resilience, and I think we get back up here to the 151 on this one. which means I double my money. So we haven't even hit the 200-day. This is the long term. So that's my first rule, is you have to make sure that you don't fall in love with a stock at a 52-week high and you trim it. I've talked about Apple previously in July, where I sold a couple of shares, and I have thousands of shares of Apple. That's the first rule. If it's a stock that you want to continue to hold, make a note. So when you sell it, and this is the second rule, when you sell it and you want to rebuy it, don't just sell it and forget it. Make sure you make a note. This is why journaling your trades is so important. What I usually do is I will put a reminder. I will ask Siri in my phone to set a reminder for Monday to look at that stock. And if it's down from where I bought it at, then I'll rebuy it. A perfect example is Palantir. I got rid of my entire Palantir stock at $20 because I saw this button hook happening. And I did miss out on 10% on the upside. But I've, since then gained a lot of money because I sold at 20. It's now at 1907. It's a solid move. I mean, that's a solid move that I've gained money and I took profits. I do see this gap here, and I am concerned that this gap comes back into play. Not completely. I think it's going to probably get to this 200-day at about 16. I will rebuy this when it gets confirmation. I have a reminder in my phone every Monday to check Palantir. So that's the second rule, is you have to set up something where you can relook at this. This is the way I manage Amazon, Microsoft, Apple, all of those grade A in my retirement account. Is I'm constantly, just when they've hit 52-week highs, I'm looking at them, I'm trimming just a little bit, and then I'm not doing anything else. So take a look at those. These sliders are super important, and it's just one of the great benefits that I see in Seeking Alpha is having these sliders. I have them in Fidelity, and I've used them for Fidelity for years. This just gives a significantly better view in my mind than Fidelity does, because I can look at the 1 week performance, 1 month, 6 month, year to date. And you basically, you import your portfolio into Seeking Alpha. And there's a coupon code at Linktree if you want to join me and just get Linktree/Daily Stock Pick. You can see I redid the graphics down below so you can look at it. But it's the second one right here. It's more than $50 off. I think it goes until next week or this week. But it's a 30% instead of 25% discount. But I like Seeking Alpha for that reason, and those are the two rules. And again, I'll include the stocks that are all at 52-week highs. I did watch Cramer last night, and I watched something that blew my mind. This woman calls up, and she says, hey, I bought Best Buy a while ago, and I've ridden it all the way down. And she said, I went to Best Buy to buy a phone. She bought a $49.95 plan, like an insurance plan, that makes it easier to return the phone, and raved about how great Best Buy was because they had that $49.95 plan. Cramer then went on to say that the CEO, if he would come on the show, he'd like to talk about the stock. And he said, yeah, it's a great stock. We don't own it in the charitable trust. So he says it's a great stock because he invites the CEO on. I mean, total conflict of interest right there. It sounded like he was sucking up. But he never mentioned to the woman, most places will let you return a defective phone. I mean, the phone has a 1-year warranty on it. Why is Best Buy charging $49.95 to make it easier to return the phone? I mean, that seems to go back to the days where you paid, the electronics maker an insurance plan, even though there was a 5-year warranty. I mean, why would you do that? That makes no sense to me. The woman raved about it. Cramer never brought it up. I would have said, hey, why are you paying? What was the benefit of that one? But, Cramer just douche. Okay, let's go over scans because I told you it's going to be a short one. We just have a couple of earnings. And we had those one rules. SARK, SARK, it's kind of fluttering around here. We really want to, this is the short of the ARKK. And you can see 34.91, we're trading at 34.05 right now. So it's even down there. You don't have confirmation. So I would not buy this one, but it did trigger in the algorithm, so I brought it up. Rivian, at some point in time, this is a $30 stock. It might take a year, might take 2 years. Old resistance turns into new support. You can see right there, old support turns into a resistance, just like it just goes both ways. So you can see it's just kind of floundering around that $17 mark. This has a buy at $16.51 starting to get confirmation. It's still an expensive stock. You go to FinViz and you can look. They're losing $5.6 billion. Their market cap is $15 billion. They lose about $30,000 per vehicle that they sell. Performance year to date, it's down 10%. It's just expensive. I do expect this one to pop. I don't expect them to go out of business. Higher for longer is going to hurt them. The cars are super expensive. When I went to the Dow and I looked 3M, which is just 3Ms, I don't know what MMX is, but 3M has a cross up. This one has been riding since 88, 89 here in the algorithm. It's just another cross up, but it's super high. That 200-day at 89 or 98 is going to provide some resistance. I'd probably stay away. And I just have moral issues with them, with the earplugs, with the Army and stuff. Nike, solid. You've crossed the 200-day. That 200-day is going to provide you some support. You've got confirmation. Ever since this 106, it's been a solid one. Anything in the 90s here was just a gift. I mean, look at this. Long term, Nike's fine. I mean, China's going to come back. Long term, you're still under the 200-day. You had that death cross. You're just kind of capitulating right there. You're moving up. I mean, I would expect it to at least get to the 122 mark. If we look at Nike here, they had inventory issues. The target price is 119. Initiated on November 17th. Truist hold with a 108 price target. Most of them are about between 100 and 120 of recent times. Year to date, you're down 7%. It's just been a laggard. Nothing solid about this name, but overall, great name. If you like these things, they extended the Cyber Monday deal for 2 more days on TrendSpider, $296.40 for the year. And if you want this deal, basically go to my link tree. And you can click that top link. Make sure you email me after you sign up from the email address that you signed up with. I get a report from TrendSpider when you sign up. It is an incomplete email address. It protects your privacy. So just email me from the email that you actually signed up with so that I can get you the welcome letter. That's the TrendSpider deal. The Seeking Alpha deal, it's just basically, I think it's 168 or something like that. Somewhere in the neighborhood. Click on that link. I can't look at it because I'd have to log out to see the deal. And if you again, I looked in the in Webull. I didn't see. Let's look at Webull. Well, I can't go into Webull right now. But the sliders right here, I don't know if Webull has it. But if somebody wants to sign up for Webull and look at it right here, you get 20 free stocks. My newsletter right here, it's completely free, dailystockpick.substack.com. I do a free newsletter every week. There is a paid one on Saturdays, usually on the weekends, where I include tips like I did with the 52-week slider stuff. This week's one was tax loss harvesting strategies I'm using. There was over, I think, almost $200,000 of trades that I basically copy and pasted in there from last year. So if you have any questions, you can email me. Email's right here. All the socials are up here. So if that's it. Oh, I did see Visible last night. Stetson Dotson on YouTube. He's got the absolute best channel about cell phone plans. And he picked this Visible plan at $35 a month as his best plan. He even signed up for it, he said, personally. $35 a month. It's unlimited premium data on Verizon's 5G. It's not deprioritized. The $25 is deprioritized. This is the one that I have. This is the one that I like. I don't have a problem with this one at all. $25. Now, when I'm in stadiums, yeah, I do tend to get limited, but you can always hop on a stadium Wi-Fi and you're fine. But the $35 plan, if you want it, click on this link tree right here, this one right here. You'll get $20 off your first month. And then it's $35 or $25. So it's super easy. You basically, if you have one of the newer phones, it's an eSIM. It happens within 15 minutes. So nice, simple, easy. And any other thing, if you want to tip me, because you made money, there's Venmo. It's the holiday season. Say thank you to your boy. Venmo, PayPal, Cash App, anything that you want. I didn't know I had a second Weeple link down there. But yeah, okay. Take care. I'll be back tomorrow. Hopefully I feel better. See you. Bye. Sherry, welcome back. Hey, Matt. Matt, be perfectly clarity clear with you. I have no idea. Great trade on SCO, though. Oil's just weak. I mean, look at this, all the way from 17 to 19. I mean, this got you out with a 13% gain on SCO. The algorithm doesn't have you back in, but it's close. I think you took that trade right before SCO's down 1.39% in the pre-market. Let me see. Let's look at a weekly. And let's do a Fibonacci. I'm going to... Your support, if you're looking long-term on SCO, 16 is the low. Let's pull this up. Your next fib level is 2110. So you're probably right. I mean, it does have confirmation. I think that OPEC is OPEC's a freaking mess right now. I did get out at Palantir. It's still listed in the core portfolio. I just got out. Did I put it in? Hold on, let's check out Savvy Trader. I thought I took it out of Savvy Trader. It's in the core portfolio because it's still a core stock. You should hold it. I just got out of it in the trading. Let's see, history. Yeah, I sold out of it in the trading portfolio. I have not taken it out of the core portfolio, Scott. Remember, there's two portfolios. The core portfolio is basically stocks that I think you could buy and hold and be perfectly fine with. In fact, Snowflake is one that I still hold, but is not in the core portfolio anymore because I think it's more a trading stock until they can prove that it's not. This one will, I've said it before, it'll go from 150 to 180 on a regular basis, 100%. It will go just 150 to 180. It's not going to, it's going to trade in between there until this company can show me that they don't go between 150 and 180. I just don't see the need to have it in a core portfolio. You can see if we go just weekly. Look, I mean, that's what goes back to 2022. So that's kind of where I'm at, Scott, is I just, you look at Palantir. I mean, if we go to Palantir, they've had some severe volatility. But this is no regrets. Weekly is a stock that shows me it's on the rebound. And so I think you get back to these $28 kind of territory. The difference between Palantir and Snowflake is just in the price action of the company. I just don't see Snowflake coming back to $400 or $500 levels. Yeah, Brody, NVIDIA, I sold out NVIDIA at 505 and 510. I have not gotten, I've added a couple down here at 400 and then I think 440. Not the full position yet because I just don't, it's too much hype. I've added more into SMCI because I think SMCI's valuation is significantly different. And I do think that you have that 16% up to that top gap. So that's where I've been in that one more. And good morning, Sherry. Welcome back. If I didn't say it. Thanks, Titan. I'll feel better, I'm sure. It's just a matter of getting up, moving, and doing what I need to do. But I am going to get out of here. Energy level is at probably a 5 right now. But yeah, look, I mean, Palantir up 1.352%. Let's see, core portfolio here. And I think this looks better on my laptop than previously. And by the way, if anybody wants to, I was working with my friend yesterday. Okay. And she's like, I like Big Head. So I added back in Big Head with the new graphics on the overlay down the bottom. But I will not use Big Head often. ELF is a solid. I mean, kudos, Sherry. ELF, I think it has valuation realities at 170. I think it's fine. I think it goes back up here to the 130s and goes to 170. I do think it's a solid play. And it's not crazy to think with their growth that they could go. I mean, that the PE and the forward PE are big, but with their growth, it's still, 170 is not out of the realm of possibility. The target price is still 139. Outperformed. The most recent target is 140, and you're trading at 117. That's a great Ulta. I'm still in Ulta. I think that one I just pulled the trigger. I pulled the trigger wrong. I should have bought ELF instead of Ulta because Ulta had already seen the rise. But here at 378, you can see solid. You're hitting right up against that 200-day on the 4-hour. If we look at the weekly, you just bounced off the 200-day. So ELF is in the makeup space. I would trust Sherry over myself, since you can see from my pale whiteness, I do not wear makeup. But I would ask your girlfriends, your wives, your daughters about ELF. If they buy ELF products at Target and they watch TikTok and they do ELF stuff, just buy the stock. Honest to God, that's the way to do it. And I should listen to Sherry. Sherry told me ELF over Ulta, and I should have listened to her. I did not do that one very well because look, if I go back here to the trading portfolio, and I look, and we look at all, Ulta, I'm down 8%. That's, we can look at the gainers. DraftKings, my top one, 32%. TQQQ, I'm still up 30%. Shopify, I'm up 30%. Uber, I'm up 18%. Amazon, 16%. Amazon was the biggest buy that I had. About $20,000 worth, not in the trading portfolio, but overall at 120 before their earnings. I just bought $20,000 worth. Meta, I'm up 11%. AMD, Joe and I bought AMD at 109. I think I added a little bit more. I just didn't add it in here. Netflix, I'm up 10%. It's $500 stock, easy. IONQ, I'm up 10%. That's because of Brandon. SMCI, this was my initial buy. I bought more since then. NVIDIA, I still have this position at 2%, but I'm up even more in it because I had it. I don't think I added it into the trading portfolio, but I added this at, remember, it was well under 400. I think it was 290. I was screaming at it. So let me see. Will it tell me? Position info. Yeah, I guess I added more. Yeah, I added more at 468. So I love Savvy Trader. I have NyQuil. Yeah, the bond auction's gonna be nothing. I mean, buyers have been showing up to the bond auction perfectly fine. So I think it might actually have been the Chinese hack, but we'll see. Okay, I'm gonna go edit this together, put out the newsletter. I will talk to you guys tomorrow. Hopefully I'll be on. If not, just join the socials and I'll try and put it out there on the socials. Talk to you later. Bye.